Thank you very much, Frank. So I will talk about a concrete use case for blockchain technology. I will talk about how the application of blockchain technology can help to solve financing problems for small and medium-sized companies and startups. There are a lot of legal questions. I will not go into any details today. I will show you the main business concept, what we are having developed over the last 3 months, so you get a good understanding of the real use case, and you don't have to make a headache about the legal implications. But we are taking them. My background is I'm a lawyer. I have been advising investment managers for the last 10 years, setting up regulated and unregulated investment structures, mainly in Luxembourg. Over the last 2 years at Hogan Lovells, I was in charge of advising fintech companies, coping with payment services directive and market and infrastructure regulation. And now I am, like, for a few months now, I'm co-founder of Cycles, of a great team, and there are also many of our team members today here in the room. Thank you for the invitation, by the way. So I will quickly talk about what Cycles is. Cycles has 2 lines of business. So we understand ourselves as project managers for ICOs. So as project managers, we connect lawyers, banks, identification providers, KYC experts, and exchanges with the one who wants to launch an ICO. We help to write the right paper, to structure the ICO. We also help modeling the tokens. As we heard before, one of the biggest use cases is tokenization in blockchain technology. And finally, we help also with marketing and helping to find investors for ICOs. And the other business line I'm talking mainly today is a business line we have founded because we discovered a huge business problem. And the business problem is basically that small and medium-sized companies have a very limited choice of financing, and normal retail investors, as all we are here in the room, have very limited choice of investments. So, the startups, SMEs, are here in the right corner, and you can see there are not so many things on this page. So startups have mainly 2 possibilities out of these 3. They can go to venture capitalists and ask for venture capital. The downside is obviously that venture capitalists want to be involved in the management of the startup, so you risk to lose control. And when you go to a bank as a startup, I don't know how many of you have set up a startup, but that's a very challenging project, because normally a bank asks for securities and would like to have like some kind of something which they can pledge actually. And when you don't kind of provide this, then you basically don't get any financing from the bank. For small and medium-sized companies, it doesn't look very much different. The option is also banks. Banks would, in this sense, pledge all your assets and make like the assets untransferable, and strangle, in this sense, also your business. And when you go to a private equity company, you have like the same problem as for the venture capital company. They will be definitely heavily involved in the business and the management, and as such, it's not a perfect option. These are options, but they are very, very, very limited. And then we have, on the other side, we have us. We have interested investors, And we have also a limited choice. We can buy stocks which are listed on major capital markets, stock exchanges, but these are mainly companies which have already a running business. They are not growing as fast anymore as, for example, a startup does, or has not a very promising future business case. Then you have obviously UCITS. UCITS are funds which are set up under the European Directive for Transferable Securities. So these are the normal funds you can buy in a Sparkasse or wherever you want to buy them. And as you probably know, they are not very diversified. Most of them have a very plain vanilla investment strategy. Basically, you benefit or the assets you're having are mirroring the capital markets and the commodity markets, and definitely no alternative investment possibilities. And finally, when you want to go for an alternative investment route, then you can buy some very strange, very weird products. In Germany, these are the subordinated debt instruments. Subordinated debt instruments, you're losing on both sides normally when you buy them. So you basically, when the company is really thriving and has like a lot of success, you get your 2-3% fixed interest, and when the company gets insolvent, you will be the last who will get anything out of it. So it's like really a loser instrument, and we think we have a solution for it on blockchain technology. So basically, what we are proposing with our platform is that startup and SMEs can issue tokens to interested investors, and this solves both problems. The interested investors have the possibility to have actually access to small and medium-sized companies and startups, and the startup has the possibility to get financing from a party where they did not have access to so far. They don't have to go to banks, private equity companies, or venture capital. They can go to an investor base which is really interested in their project and who like to take the risk, but also like to benefit from their development. So basically, I think what is very important, what you see as a main use case in blockchain technology is the tokenization, and what happens is that this SME or the investment vehicle of the SME will issue such a token, and a token can have a lot of functionalities, and for this specific task and challenge, we have implemented 2 functionalities. The transferability is like the original one of a token, but the first one is the profit participation, and the profit participation in this sense will be built into also the smart contract, which allows the investor to have a share of the profit of the small and medium-sized company or startup. And on the other hand, the small and medium-sized company and startup can issue the token, share the profit, but does not have any other strangling conditions to cope with. So this is basically the main use case for the profit participation, and it's a great element. And then, of course, like the transferability of the token is the ideal possibility for the investors to get immediate liquidity out of his investments, which is obviously not possible when you invest in alternative investments. You're locked in, and you can hope that you can get your money back. But on our platform, there's like a peer-to-peer transfer possibility. So the initial investors and any other investors who hold these tokens can transfer them to other interested investors. So that's that's basically the main use case. It's a tokenization. We also use blockchain technology as a connector between the different parties in our complex platform. It's a platform. It's in this sense also centralized, but the whole transaction process is built on blockchain, and this is actually the use case we think is very strong for financing small and medium-sized companies and startups. That's it.